This is Business Weekend with Ross Greenwood.
Hi there and welcome to Business Weekend. It's great to have your company today. I'm Ross Greenwood. Coming up on the program, the government late this week released the competition regulators' long-awaited report into supermarkets. Now, not much has been resolved, but we did discover something that I've certainly not seen or understood before, which is called high-low pricing. And it means that you should swap supermarkets from week to week to save huge amounts of money. So we'll speak with supermarket legend Fred Harrison, Chief Executive of Richest IGA.
The consumer has certainly shut up shop, they've tightened their wallet and they're being far more selective in what they're purchasing.
And as Jim Chalmers gets set to hand down a budget he never expected to deliver, we look to the coalition, which is mirroring Anthony Albanese's spending in a way that suggests fiscal discipline is out the window for both parties.
The point is, this could get a lot worse, and we don't even have to look beyond the productivity performance of this economy as a flashing red light that this is not going the right way.
And the Australians' list of the 250 richest people is out this week. So I caught up with the nation's second wealthiest person, 92-year-old Harry Triguboff, founder of Meriton, and got him to reflect on wealth, housing, immigration, and why, if he was starting again, he would not go back into home construction.
If I started today, then building is not the answer.
What's the answer then?
I think maybe making medicines. We have old people, they need medicine.
He's a cracker. We'll also speak with arguably the most senior business leader of both sides of the Tasman, Greg Foran, who's announced he's stepping down as Air New Zealand's chief executive after a career that saw him lead Walmart supermarkets in America. So all that and plenty more coming up on the program today. But look, I do want to start with supermarkets and the government, which late this week released the ACCC's final report into the supermarkets inquiry. We've said for some time the inquiry is important. It's a benchmark, but largely was a political exercise to divert people's attention away from the government's role in creating inflation, largely through bracket creep, which means tax now takes a bigger chunk of people's incomes than it did before. Now, the recommendation's largely a window dressing. The important change, a legally enforceable mandatory code of conduct, had already been introduced. Now, from this report, I think the ACCC's key recommendation is around zoning, ensuring big supermarkets can't easily block out potential competition or to crush that competition in the courts. But there is something in the ACCC final report about pricing that I'd never seen before. Now, I should have perhaps, but it's this. It's called high-low pricing. It's a classic sine wave for those who know their mathematics. In other words, you can see here a regular wave. In fact, just to explain, this is a multi-pack of Coke Zero cans taken over 6 months. It shows in green the Woolworths price and in red the Coles price, and it's a perfect dance, almost too perfect if there is genuine competition. Now, to prove this is no fluke, here's the same pattern, but this is for Praise 99% fat-free mayonnaise. Same thing. And another one for 2-litre bottles of Radiant laundry liquid. Again, the perfect dance between the supermarkets. The patterns, they're uncanny, created clearly perfectly by mathematicians inside the retailers who understand margin and discounting and how to control them. And this dance is created not by supermarkets alone, but also their suppliers.
Oscillate is probably the best word to use between high and low prices each week. The classic one is dishwashing tablets. There's an example there of dishwashing tablets that one week are $54, the next week are $27. And of course, each week that occurs, the opposite price is evident at the other supermarket. So that sort of confusion is what we're trying to cut through with some of our recommendations.
Now, it's this information that shoppers need to understand. Put simply, it shows that if you're a regular consumer of certain products, but I should stress not all, you should change your supermarket every second week to take advantage of this high-low strategy. The difference is remarkable. For that Coke Zero we're talking about, the price difference from high to low is more than 50%. For the Radiant laundry liquid, the difference, again, close to 50%. For the mayonnaise, around 25%. Now, that would make a real difference to any household budget. The trick, of course, is to work out which products are cycling high or low on any given week, and to have the discipline to understand which products are cycling high in price and therefore to avoid them. Now, these charts show that prices are not random. They're deliberately and scientifically worked out with the sole aim of maximising revenue. So, let's try and work out the ramifications of the report and the government's response from perhaps the most experienced supermarket chief executive in the country. So I caught up with Fred Harrison, chief executive of the independent retailer Richest IGA, and just started by asking him about that high-low pricing.
High-low pricing has been in our industry for 50 years, Ross, that even longer. That's how long I've been going. Basically what it is, every product has a standard shelf price. So you'll put a product on the shelf, it has a shelf label, that's the standard price. And then suppliers will want from time to time to promote that product. And they will come to the retailer with a significant deal, and that deal may lead to a half price. It may lead to a 40% discount, 30% discount. The supplier provide that deal. We put it in our catalogues, into our handbills, on TV, on radio, and promote it at an aggressive price point for the week. And then at the conclusion of that week, it returns back to its normal shelf price.
So one of the things about the ACCC report, you could see products in there that seem to be almost coordinated on a fortnightly basis with the other supermarket going the other way. Did that seem unusual to you?
No, there's a program that we don't all have the same promotion on the same week. So the supplier might, week one, have Coke on promotion with Woolworths. Week two, have Coke on promotion with Coles. Week three, with IGA. And then the process starts again. It's regular promoting that, and many lines would be on promotion up to 26 weeks a year on high-low.
So then go to other parts of this. One of the things I thought was really important was about the zoning, about the notion that maybe big supermarkets shouldn't be able to challenge competitors coming into a particular region. And of course, they in the past have taken people to court to try and protect their patches. Is this something you see as quashing competition in supermarkets in Australia?
Look, we don't see a lot of that. I mean, we're seeing land banking from the chains, and that certainly makes it more difficult for independents. I mean, if there's a site down the road that Woolies own or Coles have links to through one of their property divisions, that will often deter you from wanting to open a store. So land banking is an issue. I mean, matters don't go to court that often. There'll be the occasional time, but generally you don't see the matter ending up in court action.
So it just seemed to me, though, that many of the issues in supermarkets had already been addressed, in particular by the mandatory code of conduct, which had already been put in place. So to me, this really didn't answer too many more questions about the conduct and behaviour of the big supermarkets in particular.
Dead right, and I agree with you. And if you go back 12 months ago, everyone spoke about price gouging. It was price gouging, price gouging, price gouging. Now, there's been very little said in this report around price gouging. I don't think that's been conclusively found or mentioned. I mean, there are processes and changes in communication, but I don't think there's going to be a lot in this that's going to be of major benefit for the consumer. We're talking a bit more red tape. That's, as you know, in business, red tape adds to costs. So, look, time will tell. I mean, there's a couple of reasonable initiatives, but I think we probably all need to read the report in more detail. At the moment, many of us have only had a scant read, but I don't see any radical change, particularly with the fact that land banking hasn't been addressed, and it makes it harder for independents to open more sites and compete more readily against the chains.
So you've been, competing with the big supermarkets for decades. Now, in your role, Fred, you would recognise as to whether it's more competitive, less competitive. You've got Aldi now. What are the conditions in regards to competition right now like?
Look, the consumer is very demanding. We're seeing a very significant change in what people are buying. Promotions are now very popular. We're selling up to 10, 12% more items on half price, 40% discounts now than we were, say, 12 months ago. All those lines come at a lower margin to the retailer. So we are battling to hold our margins, say, compared to last year. So to answer your question, I'd say right here and now, competition in the supermarket industry is reasonably fierce, but you've got to temper that with the fact that the consumer has certainly shut up shop, they've tightened their wallet, and they're being far more selective in what they're purchasing. So I think it's the economic conditions around us, the cost of living, that is making competition more intense than perhaps it normally would be.
I'll tell you what, it is always great to have you on the program, Fred, the most experienced supermarket retailer and chief executive in this country right now. Fred Harrison from Richest IGA. Always great to chat. Many thanks for your time.
Thanks, Ross.
Now, the government and Treasurer, of course, chose Friday to drop that ACCC report into the supermarkets. It did so, perhaps, to divert attention away from Tuesday's budget. A budget that promises little, except to show the extent of the government's spending and the amount of tax it's taken out of workers' pockets, plus the $1 trillion of debt that'll be racked up over the next 10 years. But not all attention should be placed at the government's feet. The coalition, in a bid not to be wedged before the election, has rolled over and agreed to the government's $8.5 billion of Medicare bulk billing and extra doctors' visits, and close on $690 million for cheaper medicines under the Pharmaceuticals Benefit Scheme. Now, if they weren't in such big debt, these might be a reasonable thing for the nation as a whole, but the economy's barely moving and debts just keep on mounting for the next generation. And for that, culpability has to be directed at both major parties. So let's bring in here the independent economist, Warren Hogan. Warren, always good to chat to you. This is a reality. There is no discipline, it seems to me, on spending from either side. There is no messaging from either side. Hey, we've got restraint. We understand about trying to balance out these budgets. We understand we've got to get this back into surplus in the future.
Yeah, and that's, of course, what we've been doing in this country for the last 30 years. And this government certainly isn't. And the spend from this government and Australian governments in the last 5 to 10 years has just been one way. And
you can't cut the coalition slack either on this.
Well, they were in before and they were spending big. And, of course, yes, they are matching them. I think that's the politics of being in opposition. Australian governments get kicked out at elections, they don't get elected in. So for the opposition, no matter who they are, they tend to not want to give a reason not to kick the government.
But OK, yeah, but Peter Dutton, Angus Taylor, will be firmly aware of what took place with Tony Abbott and Joe Hockey's first budget, with Matthias Cormann, it would be fair to say. When they tried the last budget in Australia that had any form of austerity, there was uproar from the business community, there was uproar from the community at large, and largely that spelt their doom, I guess.
It did. Well, it was a huge political cost those two individuals paid, although it did start 8-10 years of coalition government. So there is, of course, a rationale behind why you come in and have a look through things. And, of course, this government now, the ALP government that got in, said they were going to do that. And they were somewhat disciplined at the start, but it's just gone. And, of course, they're getting this extra tax take, the bracket creep, the income taxes, and they're spending it. And every other week there's a new spend happening.
OK, but they say, hang on, you know, and I hear the Treasurer say this, right? And when he says it, he's very convincing because he is a good salesman. Let's be honest about this. But the reality is that when he says this, he's going, if it weren't for us giving out cost of living relief, and if it weren't for us changing those tax cuts last year, you know, Australians would be much worse off. And remember that the coalition didn't support those things. He says it the whole time. But the fact of the matter is, these are debts on future generations. Debts at some stage that will have to be paid off. Somebody's got to take the hard decisions at some stage.
Well, that's right. And if you don't get ahead of it, we will have an economic crisis of some sort. We will be forced to deal with it, and we will not have the control that we would have if we were doing it ourselves.
So what you're saying is the lessons of, say, the 90s, the 80s and 90s, if you don't get some sort of control over your budget, that simply increases the risks that you don't have the buffers if ever there is a significant downturn in the future.
Yeah, and it's more than just the budget. It's the whole economic strategy, and it's what is happening in the economy. I believe this economy has changed fundamentally in the last 5 years, and I also believe that the government and many others do not understand that, and we're seeing things like this big government increase to provide cost of living support. When you don't spend money to deal with inflation, you raise interest rates. we don't want to have a recession. Well, is a mild recession now better than a bad recession? We're not making the tough decisions. We're trying to get through as easily as possible. And the reality is, I think we are on a pathway to an economic crisis at the moment. Whether that's a severe recession and what the dimensions of it, I don't know. But we cannot keep going down this path where we have inflation. It might not be at the consumer level right now, but business costs are going up.
Yeah.
And so what's happening now is they're not passing on their costs because the consumer has been soft for the last 18 months, but their profitability is disappearing. And of course, they're going to stop investing, and some of them are failing.
And record numbers of small and medium-sized businesses failing right now.
The ASIC insolvency numbers are at record levels, although the insolvency rate's not. But the point is, this could get a lot worse. And we don't even have to look beyond the productivity performance of this economy as a flashing red light that this is not going the right way. And I hear it from business every week that this is not sustainable.
Okay, so a lot of those businesses that we've talked about, and this has been a common theme on this program over a long time, are simply picking up their assets and moving to the United States in particular, because they can get a bigger bang for those dollars in America. So the whole point about this is that if you have productive businesses leaving the country and going somewhere else, what do you got left here in Australia?
Well, that's right. I mean, that's largely the domain of bigger business and some bigger medium businesses. And of course, they're going to look at every option for their survivability or their profitability. We have to get our house in order. So our energy market is a problem. Our industrial relations and our labour costs are a problem for every industry, from mining through to hospitality. So at the moment, we do not have a government that looks like they are addressing these issues. The economic trends show that we are not making any headway. And of course, if we don't get on with it, and of course, dealing with the budget going into deficit and spending growing is a part of that. But if we don't get on top of it, the economy will shift.
So what are you looking for in Tuesday's budget? Of course, the Treasurer is going to do a great sell job. That's what he does. He talks a good game. The question is, do the numbers actually justify that?
Yeah, so the first thing will be straight up, how much extra money have they got because employment's been stronger, wages have been stronger, and then did they just spend all that? Ahead of an election, you'd assume they will. How much spending are they going to do? Because that's what we can't do. We can't just keep spending this money. We've got to look at ways to cut the tax burden. So, look, I think the key issue is going to be the amount of spend there is. If it's about $10 billion over the next year or so, 18 months, that's not the end of the world. But any more than that, as you're heading up towards 1% of GDP, that's a problem.
I'll tell you what, Warren Hogan, always great to have you in the program. We'll find out about that on Tuesday when we're at the budget. Thanks for your time.
Thanks, Ross.
Well, coming up after the break, we get lessons in life and in finance from Australia's second wealthiest man, Meriton's Harry Triguboff. Thanks for being with us here on Business Weekend. Any analysis of wealth in Australia has to consider the economic environment and those at the right crossroads of that economic change. In the past few years, a new generation of wealth has emerged, perhaps personified in the person on this weekend's cover of the Australian's Richest 250 edition, Lawrence Escalante. Now, the son of immigrants, his gaming tech company has built his wealth to $4.3 billion. And you've probably never heard of him. He's not the only 30 or 40-something entrepreneur making money fast. John Stensholt is the editor of the Richest 250 at The Australian. John, always good to chat to you about this. Lawrence Escalante, just explain for people who don't know, how did he actually make his money?
Yeah, so it's a combination of gambling and gaming, right? But he likes to be, you've got to be really careful and say it's actually everything operates under what he calls a sweepstakes model. But very basically, his virtual gaming worlds is virtual worlds with gaming, right? So if you want to play online casino games or card games or do a bit of sort of gambling in that way, you can do it on his websites, which is actually banned in Australia. So most of his customers are in America. So that combination of sort of gamifying that online gambling experience is where he's made his money. He's making something like $6 billion a year in revenue, which makes it one of Australia's biggest private companies, but all of that money is derived overseas. So I think that really encapsulates what's going on here in the global world that we operate in these days.
So, yeah, I want to go to that in a moment, but go to also these younger, new generation of entrepreneurs. Now, there have been some of them around. People will know the Atlassian story. They'll know the Canva story, for example. But the reality is there's another generation coming even behind them. Some have been in data centres. Others have really been at the crossroads of artificial intelligence. Others are medical technology. But the reality is, as you point out, as soon as they crack the world, they really crack this list of the wealthiest people in Australia.
Yeah, the beauty of, I suppose, the internet these days and technology is you can still stay home, be domiciled here in Australia, but your market is the world. So that's what's really changed. Like back in the old days, your market might have been, just the city you're in, or the country you're in, or the state you're in. So these people can go global from day one, and that's the ambition that they actually talk about, Ross. They talk about, look, it's not worth building a company unless you want to actually take it around the world. So I reckon that's a really interesting twist in the mindset. And clearly, the internet, social media, everyone being able to see what's happening around the world, at their fingertips these days is what's driven that mentality. And I think that's pretty clear what's happening with these entrepreneurs who are making, big money in their 20s and their 30s. It's not the days where they might have to wait until their 50s and 60s, to make really, really big money. These days, it's pretty quick.
So, John, we're seeing some vision there of Richard White. And, of course, we've done documentaries on this network about Richard White and his innovation, his software at WiseTech. Now, quite clearly, he has been in the news a lot, and that's all about behavioural issues at WiseTech, and shareholders are having their say. But what about his wealth over that time? Because the share price has taken a hit from time to time.
Yeah, you could argue it's been the year of Richard White. Richard White one way or the other, couldn't you? There's been all that sort of, off-company controversies that swirled around. Over the year, the WiseTech share price is actually up a fair bit, and he's put on $5 billion in his wealth this year, so he's up to about $14 billion, which is a record for him. Now, it would have been even more a few weeks ago, Ross, when I was, finalising the calculations. It was the week that 4 board members stepped down from WiseTech, due to what, the corporate governance sort of issues and arguments they were having. The share price went down, I think it was 20 or 25% during that week, and had to cut $3 billion off his wealth. So he's still, I think it's 14.82. It was going to be 17.82 or something around that mark. So it's really interesting to see what those sort of headlines, whether they actually affect the share price and the wealth. So, look, sometimes they clearly do. You can think of the Chris Ellisons of the world who are down due to corporate governance matters that have hit their companies in the past year. But with White, look, that WiseTech Global, the fact that it's called Global, shows you that that's the nature of the company, right? It's making money around the world. And his argument has been that, look, shareholders or customers that are on the other side of the world, they don't really care what's going on behind the scenes here in Australia. They just want to know about what the company's actually doing rather than all that other stuff.
Yeah, OK, so if we, sitting here today, are able to see a boom that's coming, it's pretty obvious that is artificial intelligence. Now, even though people might have missed out on NVIDIA shares or whatever it might be, the truth is it's all the applications that are coming in the future of artificial intelligence that will generate enormous amounts of wealth. So there will be also another generation of wealth makers in your list in 5 years' time, 10 years' time, that will have built their wealth that way as well. Are there any signs of that coming now?
Look, some of it's through the data centres, as you mentioned, right? I mean, Robin Cooter's a clear example with AirTrunk. He's worth $4 billion or so these days. So he's having an amazing time after selling. Well, the company got valued at $24 billion last year when it was sold. Now, I mean, the argument probably with that, Ross, is that we're the top of the market when it comes to data centres. There's one that just missed actually. Greg Borer from Canberra Data Centres, or CDC, again a very big valuation. He's worth about $600 million. So those are some. Greg Goodman with Goodman. That's a property play with a data centre sort of aspect to it as well. There's other companies that are starting to come through in a tech space. I think what's really interesting is that some of the you think of the Seeks of the world or those sort of companies that were there at the vanguard of the internet. There's going to be companies now that are the vanguard of AI are literally created when AI is around that weren't here before. So I think again, if you can scale that company globally from Australia, or I know of some Australians that are actually over in Silicon Valley doing that too. You could be worth an extreme fortune very, very quickly. I think that's the next iteration. So the 20-somethings that turn into the 30-somethings are there or thereabouts.
I'll tell you, the other thing that's a common theme for us on this program is talking to chief executives who are saying they're going to move their capital to America because they think they can get a bigger bang for their buck. They talk about industrial relations, they talk about tax policy, they talk about energy policy. What I'm wondering is whether there's something similar with Australians, the wealthy Australians, whether they seek to have more of their business and their capital in America or other parts of the world because of A, the scale, B, the fact that they can get taxed less, and C, really that ability to make more of what they've got in other parts of the world becomes much more important than being in Australia.
I think clearly the US is a massive market no matter what, right? I mean, so if you can crack it in America, you're going to do really, really well. So you have some clear examples of that with Anthony Pratt, his Pratt Industries, cardboard box manufacturing empire, goes to America, builds up sort of 6 to 7% of the market and keeps going and going and going. You've got the Pro Medicus guys with Sam Hubert and Anthony Hall who have an amazing amount of business over there with their, online radiology sort of, imaging business. There's others that are looking to get there too, though. Nick Wakim, who is a mining entrepreneur, an entrepreneur who has a big lithium plant or business that he's building in California, and that's just getting started. But he's all about doing that there because it's easier to do it than it is in Australia, maybe a little bit cheaper. The US onshoring, situation or mindset that's coming. He figures that it's better to be there where there's all sorts of, other battery companies or even the Teslas of the world or whatever that are going to be based in America. It is easier for them to do business in the US. And yes, there is a trend. It probably depends on what industry you're in to a certain extent, Ross.
John, we've been doing it for years and years. The editor of the Richest 250 in the Australian this weekend. Many thanks for your time.
Thanks, Ross.
So on the Australians list, Gina Rinehart is judged as the wealthiest person, worth around $46.3 billion. The second wealthiest is the founder of the apartment construction and sales company Meriton, created by Harry Triguboff around 60 years ago. He's built more homes than any other person in Australian history. Triguboff, who's now 92, has his grandkids Daniel, Ariel and Ella working in the business, but he still turns up every single day. So I took the opportunity to catch up with him late this week. Harry Triguboff, it is always great to have a chat to you. The Australian newspaper this weekend says that you're number 2 in their list of the richest people in Australia. Do you feel like you're the second richest person in Australia?
I don't change. I don't care.
Those lists, are they worthwhile doing or not worthwhile doing, do you think?
The lists?
Yeah.
Well, no, I think it's a good idea, yeah. It's a good idea for this reason. Like, if I want to know about people, that's where I can find out. And we work together, all of here, there, and everywhere. So I think from that point of view, it's very worthwhile, yes.
You never set out to be as wealthy as you are.
Nah.
You've got everything you want. Is there a point at which you ever thought about stopping or not?
Never thought about stopping because I made this company like for the family. I don't mean family only the people, but also family that work there. So that's why I made it.
But you have got family, your grandkids, which is Daniel, Ariel, Ella, they're in the business now. They're now. Are they running the business for you yet, or are you still running the business?
From the first day that I started to run less of it. Obviously, now it's very big, and they are working in many different fields. But there's not only them, there's also the managers now. When I started with 3 people, that was what I started with, then I managed everything. When I already had 20 people, then already somebody did something else. See, I did a very interesting thing. When I started, there were very few builders of little blocks. There were big ones that the government built for Housing Commission, big ones. But little blocks were very few. They were all cottages. Now, I never built cottages. I don't believe in cottages. So I built apartments. And there were no apartment builders. There were carpenters. So I saw the good people that were subcontractors. So if they were a good subcontractor, then he had a good brain for money. So I made them my builders.
So they're almost part of your family, though, now. You've supported them, their families. Some have created big businesses themselves, haven't they?
Very big businesses, yes, of course.
So then tell me one other thing, and that is we're about to go into an election. Do politicians hold our country back, or do they make our country better?
At the moment, definitely back, because the opposition says they can't do anything. It's up for the government to do. The government, they decided that they would build a lot of apartments, which is very nice, very good idea. But the problem is that they didn't go about it in a normal way you would do it if you wanted to build. For instance, they've already been trying to increase our production, but it has not increased. Now, talking that they can do so many more than what we are doing now, quite unbelievable. If you're supposed to raise the production, why is it falling? If it's falling, then why do you talk about raising? So they have to start working. There's no difference between building a house or 1,000 houses. They should all the time see how much is being built. They have to see how much it costs. Now we have a huge problem that the biggest number of people that went broke have been builders. Now that is a very, very big problem. I don't see how they are helping them. Now, what they're helping are the banks, but the banks don't give people money to build. Now that's it. They won't give you money. How they can build without money, I will never understand. Nobody can understand. So, I mean, they talk about foreigners coming here. Foreigners have left. They didn't come. They left because they lost money. A lot of, like we had the epidemic here. Now that was very bad. Nobody's fault. But we had to help somehow. Nobody got help. If a builder goes broke, well, he goes broke. He goes broke. But it shouldn't be done like that. If they go broke, then we want a building industry, then we should help.
Because isn't there a bottom line here? You as a builder or any other builder doesn't build a home or a unit block unless they can see a profit at the end. They'll take a risk, but they need a profit at the end. If there's no profit, you don't build. That's the problem right now. There's no profit.
They all lost. Well, you read about the best builders that we have, but they are really now subcontractors. They're not builders. You don't see any builders. He has to find somebody with the land to do with him a deal together, or he has to find somebody from overseas or from there. But none of them really have their money building the block.
But then you're a big supporter of immigration. You think there should be a lot more immigrants coming. But if a lot more immigrants come, but there's no building, the price of property goes up very fast, too fast. Isn't that a problem too?
Not such a big problem. You see, the bigger problem if we don't have workers here. That's their problem. My problem is if we don't bring people, then we will have no workers. Building should not control our growth. Today, they got into their mind that building controls the growth. And I say it does not control the growth, and we shouldn't allow it to control the growth. And I say that we have a huge country, big, huge country, and very few people. And I say that we never give ourselves credit how clever we are that we can control such a huge country with so few people. That's where I go. I never hear anybody say that. It's very easy to control Switzerland because it's very small. That's very easy. Of course they can control it. But it's very hard to control Australia. If you just go out and see how great the area is, and it's all empty.
Bringing more people to Australia. Politicians aren't brave enough to do that, though. Right now, they're cutting the number of people coming to Australia, not lifting it. But you say that just doesn't work.
You can see it doesn't work. So I don't have to prove it. It doesn't work. We need people all the time. And that's what we've been doing. We've always brought people here because that's what you need.
Tell me, why is it that you historically have only ever built in Sydney and the Gold Coast? Maybe a little bit in Brisbane, maybe a little bit in Canberra, maybe a little bit in Melbourne, but Sydney and the Gold Coast, two places that you've built. Why those two places?
Sydney had the highest prices, so I could make there the most money. Surfers, Rhonda, my wife, loved it, so we used to go there a lot. I didn't build as much there, of course. Now I'm building these huge things. But they are the two, and what happened now, Melbourne prices have dropped, not as good as Sydney. It's an easy answer that surfers and Sydney are the best because we only have one surface for tourism, for many things. And also easy to build. See, now, if I have a problem in surface, I go to the people there and we work out. If I have a problem in Sydney, they tell me that's the law. If you have a problem, that's your problem. So that makes it very difficult.
Harry, 92, you look back, Australia has been good to you, really good to you.
Very.
You've been good to Australia, you could argue.
Right.
If you started all over again, would you do the same thing?
You mean to come to Australia or to
come to Australia and to build? Would you do the same thing?
I would definitely come to Australia. That's easy. But if I started today, then building is not the answer.
What's the answer then?
I think maybe making medicines. We have old people, they need medicines. The government has to pay. But definitely not building. Building is the last thing I would start. I mean, I have a lot of land, so I build, but attitude is ridiculous. You see, there was really nothing ever wrong with our buildings, not merited generally. So then they started to make sure that the buildings would be better. So many buildings were stopped, many buildings, that's all nonsense. You can't do like that. It happened because body corporates take the builder, say that he built it badly. And they could drag the case for many years. Because lawyer, he wanted to drag it. The more he dragged, the more money he received. Whether I fixed it or not fixed it, he couldn't care less. And now it's come that it's impossible to build. It's impossible. Forget about whether the council is fast or this. How can you build? If you build, these lawyers come to you and say, your building's no good. Everybody fights to buy the unit, but he says it's not good. No? That way you can't do.
Harry Triguboff, it is always a pleasure when I speak to you. I get and learn so much, and I appreciate your time today.
Well, we do our best.
We do our best.
And we will do our best all the time.
Thank you so much.
Thank you very much.
Harry Triguboff, an absolute legend. Well, coming up after the break, perhaps the most experienced executive on both sides of the Tasman, the outgoing Chief Executive of Air New Zealand, Greg Foran. Thanks so much for being with us here on Business Weekend. Well, in the past couple of weeks, we've reported on some unusual departures from very big jobs in New Zealand. There was Gavin Orr, the Governor of the Reserve Bank of New Zealand, who left his job not long after his contract had been renewed. And not long afterwards, Greg Foran, Chief Executive of Air New Zealand, which is 51% owned by the government there, also said he'll leave, but later this year. The twist here is that the New Zealand Prime Minister, Christopher Luxon, is also the former Chief Executive of Air New Zealand. But look, Greg Foran, without doubt, is one of the most experienced executives on either side of the Tasman. So he ran Woolworths supermarkets in Australia, but left when he was passed over for Grant O'Brien as Chief Executive. So he packed up, went to the US, where eventually he became Chief Executive of Walmart's US supermarkets division, around 4,600 of them or so. He left that job to go home to run Air New Zealand. So it was opportune this week that an Air New Zealand delegation, or rather a New Zealand delegation, was in India drumming up business. And our New Zealand correspondent, Jack Nyhoff, who was there, took the opportunity to catch up with Greg Foran. Just started by asking him about deals with India.
Yeah, we're actually launching two things. The first thing we're doing is putting in a code share arrangement with Air India, and that is going to take effect in literally a couple of weeks, and that will create even more services that customers can use via Singapore Airlines, who are a great partner as well, to get to and from New Zealand. And then we also have announced that as we get regulatory approvals, as aircraft become available, we'd work again with Air India to get some direct flights between Auckland and, in all likelihood, Delhi, sort of circa 2028.
An interesting time for aviation at the moment. Other airlines have been shocked by the COVID recovery. Has this been the case for Air New Zealand?
Yeah, look, we've seen a number of headwinds, to be honest, and also some great tailwinds. And I'd sort of characterise it and have characterised it under sort of survive, revive, thrive. And I think what I've seen is possibly the time frame for that has extended. And that's driven by a couple of things. One of them has been that, the New Zealand economy has sort of, contracted to some extent as spending has come back and interest rates went up, etc. But we're also beset with some of the issues that you see around the world as the ecosystem in aviation gets up to speed, and we've got our share of challenges with Rolls-Royce and Pratt & Whitney and Boeing being a bit late. But I'm really pleased with the way the team have navigated through that, and I've referenced it along the lines of sometimes it's a bit like, being the All Blacks without the front row. You make sure you don't buckle and you get on with it. So some headwinds and some tailwinds.
You're a very senior business executive. You were the boss of Walmart in the US. You've also spent some time in Australia with a career at Woolworths. Given your experience in business globally, how do you feel the Trump administration will impact business around the world, but also in Australia and New Zealand?
I think it's evolving is the best way to put it, and I do spend a bit of time talking with aviation people who are operating in other markets, and I see some of the thinking that's going on around what tariffs are going to do and whether that's going to impact seat production for aeroplanes or metal or parts. But it's evolving, and what you do in these situations is you take your time, you work your way through it. A saying that we use a lot in Air New Zealand is panic slowly. And I'm sure that there will be lots of things that are going to occur in the aviation industry, not just with changes in administration in countries, but various other things, and you just work your way through them.
There's a lot of talk about the synergies between Australia and New Zealand. How do you think Australia and New Zealand can remain viable places to do business? There's always a lot of joking, perhaps sometimes, about Australia and New Zealand becoming one country, but do you think they should act together more as a bloc when it comes to business?
What I would say to you is a couple of things. The first one is that both those countries run very proud airlines that just don't have a purpose in connecting people and moving people, but they actually represent the actual DNA of each country. And I say that being an Australian citizen as well as a New Zealand citizen. I lived in Australia for 15 years and worked there, raised family there. So I understand the role that Qantas plays to Australia as a nation, and I equally understand the role that Air New Zealand plays, the very proud feeling we have of that koru on the tail of our plane. So there's a cultural aspect there. There's also in each market a very strong domestic business, both in Australia and New Zealand, which needs to stand on its own 2 feet. there's no doubt when you get to international flying, you get planes crossing over and representing, if you like, each other in the same ports. So, I see them as two very proud airlines getting on and running their own business.
Some big personal news. You've announced you've resigned as CEO of Air New Zealand. What's behind that decision?
A couple of things. By the time I resign, I will have been in the role almost 6 years. And that's a reasonable length of time to run an airline like Air New Zealand. I'm keen to see what other roles I may do. I haven't decided anything at this stage. And, if you've pulled together a good team, it's an opportunity for the people that, you've brought in and developed to get in and have a chance to run the business. So, it's a combination of all those things coming together, and, I think that's exactly the case.
You've done airlines, you've done retail, so would you be looking at a different sector then?
Who knows? As I said, I've enjoyed that challenge of learning something new, and
are you looking to stay in New Zealand?
Have shown that I can do that. Once again, I'm not closing my mind to anything or any location, and I'll see what develops. I don't have anything at the moment. What I do is I've got a commitment to get through to the end of the year, and I think for those people who know me, they know that I take that commitment very seriously, so I'm 100% focused on Air New Zealand and will stay that way.
I'm interested to know, reflecting on your younger self, where would you base yourself if you could choose again to live? Where do you think is the best place for a young executive to thrive in business?
We know I've lived and worked in 5 different countries, and I would say to you that all of them provide opportunities. I've obviously had a very wonderful career to date in New Zealand, and that may continue. I've had the opportunity of obviously working in Australia for a number of years, and I think Australia is a wonderful country and full of opportunities. I've worked in China, and I think many of your viewers would understand the scale and the complexity, and I look back at my time in China. I've looked after businesses in Asia and then of course the United States. Any of those have been terrific, and I would go back to any of those locations, and if I was 20 years old, I'd go back and do many of those things again. I've really benefited from that journey.
Greg Foran, thank you for your time.
Thank you.
And that's it for the program today. Up next is all the latest news right here on Sky News. Business Weekend returns next Sunday, but of course you can keep up to date with all the latest business news with our daily program Business Now, 4:30 p.m. Eastern Time, and via our website skynews.com.au. Thanks for your company today. I'm Ross Greenwood. We'll see you next week.